Ghana's finance minister directs central bank to consider selling its headquarters as measure for bailout. Welcome to the Bold African Voice, BAV, where we provide you with critical analysis, in-depth discussions, and comprehensive coverage of the latest African news. I'm Abdul Karim Kargbo, born and raised in Africa. Today, we're taking a close look at the Ghanaian financial crisis and the controversial move by Ghana's finance minister. Will selling the central bank's headquarters be the key to stabilizing the nation's economy, or is it a dangerous gamble? Stay tuned as we unpack this unfolding story. In a dramatic turn of events, Ghana's Ministry of Finance has rejected a request from the Bank of Ghana, BUG, for a 53 billion cedi bailout. The central bank, reeling from substantial financial losses, had sought urgent support to mitigate its dire financial standing. However, the ministry, led by Finance Minister Dr. Cassiel Ato Forson, has suggested an alternative solution that has sparked considerable debate, selling the newly built headquarters of the Bank of Ghana as a measure to stabilize its financial position. This move has sent shockwaves through both the banking sector and the broader economic landscape of the country. The Bank of Ghana's financial crisis. The financial difficulties of the Bank of Ghana are rooted in the fallout from the controversial Domestic Debt Exchange Program, DDEP, initiated under the previous administration. This program resulted in a significant restructuring of the country's debt, which, in turn, led to a staggering loss of 70 billion cedis for the central bank. Of this loss, a substantial portion, around 50%, came as a consequence of the debt restructuring, which involved haircuts to bondholders as a part of the program's terms. The Bank of Ghana's fiscal turmoil is not an isolated issue. It reflects the larger struggles of the Ghanaian economy, which has faced soaring inflation, a depreciating currency, and mounting debt. The country's economic woes have prompted urgent calls for structural reforms and fiscal discipline, with both the IMF and local analysts warning that the status quo is unsustainable. The Ministry of Finance's response: internal solutions and property sale. In response to the central bank's request for a bailout, Dr. Forson's ministry has rejected the idea of a direct financial intervention, signaling the government's limited capacity to provide the necessary resources at this time. Instead, the finance ministry has proposed a more unconventional solution: the sale of the Bank of Ghana's new headquarters, a move that would unlock substantial capital to address the central bank's immediate liquidity crisis. The headquarters, a symbol of Ghana's ambition to modernize and enhance the infrastructure of its financial system, was completed at a hefty cost. It was envisioned as a flagship project that would solidify Ghana's financial standing within the region and beyond. However, with the central bank in financial disarray, the building now represents a potentially invaluable asset that could be liquidated to restore solvency to the institution. This proposal, however, has sparked a heated debate about the long-term implications of such a decision. Critics argue that selling the headquarters could undermine the Bank of Ghana's credibility and institutional capacity. The central bank's headquarters is not just a physical building, but also a symbol of its independence and institutional strength. For many, parting with such an asset could signal a loss of confidence in the central bank's ability to function effectively. The role of the IMF. Growing tensions. Compounding the situation is the role of the International Monetary Fund, IMF, which had previously expected both the Ghanaian government and the Bank of Ghana to agree on a plan for recapitalization. The IMF, which has been involved in Ghana's economic restructuring efforts, had anticipated that the government would play a central role in helping the central bank recover from its losses. However, with no bailout forthcoming from the government and the central bank's own proposals falling short of IMF expectations, tensions are mounting between Ghana and the international financial institution. The IMF has made it clear that for Ghana to secure further support, including debt relief and additional funding, the central bank's capital needs to be restored. The IMF's insistence on a recapitalization plan has only added to the pressure on Ghana's policymakers, as the country struggles to balance its own fiscal constraints with the demands of external creditors and financial institutions. As Ghana's fiscal position continues to deteriorate, the government's ability to navigate these complex dynamics will be critical. The potential for a collision between Ghana and the IMF looms large, especially if a viable recapitalization plan is not swiftly implemented. For the IMF, Ghana's failure to stabilize its financial system could signal broader risks to its program, potentially undermining the country's relationship with international lenders. Broader economic context. The Africa-wide implications. Ghana's financial crisis is emblematic of the challenges facing many African countries today. Across the continent, central banks and governments are grappling with the fallout from the COVID-19 pandemic, soaring debt levels, and economic mismanagement. Ghana, once considered a beacon of stability in West Africa, now finds itself navigating one of the most perilous economic periods in its history. Countries like Zambia, Mozambique, and Nigeria have similarly faced challenges related to debt restructuring and the need for fiscal consolidation. Zambia, for example, has undergone its own debt restructuring negotiations with the IMF, and Nigeria has been under pressure to address its mounting external debt while managing inflation and currency depreciation. In a broader sense, Ghana's crisis highlights the vulnerability of African economies to external shocks and poor fiscal management. The pandemic exacerbated existing structural weaknesses, and as global economic conditions remain uncertain, many African nations will face similar dilemmas: how to manage growing debt loads while avoiding financial collapse. For Ghana, the situation also underscores the importance of strengthening its financial institutions and ensuring that policy decisions are not solely driven by short-term crises. Long-term economic reforms are necessary to avoid further recurrences of such crises and to build a resilient economy that can weather both domestic and global economic shocks. Forward-looking approach, sustainable solutions, or short-term measures. The way forward for Ghana will require a combination of internal reforms, external support, and institutional strengthening. A key focus should be on building a sustainable fiscal framework that can support long-term growth while avoiding excessive borrowing and reliance on external bailouts. The current economic model, which has heavily depended on international loans and aid, needs a rethink if Ghana is to avoid a prolonged period of instability. One potential path forward is for Ghana to explore alternative forms of financing, such as public-private partnerships, PPP, or engaging more proactively with the African Development Bank, AFDB, and other regional financial institutions. By diversifying its financing options and ensuring that public investments are aligned with the country's long-term economic goals, Ghana could better insulate itself from external pressures. Another crucial area for reform is the banking sector. The Bank of Ghana's ability to function effectively is central to maintaining financial stability in the country. The government must work alongside the IMF, World Bank, and other stakeholders to develop a comprehensive recapitalization plan that strengthens the central bank's financial health without resorting to drastic asset sales that could undermine confidence. The Ghanaian government will also need to address the structural factors that led to the central bank's financial woes in the first place, such as mismanagement, insufficient regulatory oversight, and inefficient public financial management practices. Strengthening these areas will be essential for ensuring that future crises can be avoided. Ghana's current financial predicament, marked by the rejection of the Bank of Ghana's bailout request and the controversial proposal to sell its headquarters, underscores the complexities of navigating fiscal challenges in an increasingly interconnected global economy. The government's ability to find internal solutions to the central bank's woes will be crucial, but the path forward will require a delicate balance of internal reforms, external support, and long-term fiscal discipline. How Ghana handles this crisis will not only affect its own future, but could have ripple effects across the African continent, serving as both a cautionary tale and a potential model for others facing similar challenges. Ghana's relationship with the IMF, an increasingly tense affair. As Ghana's economic difficulties intensify, The tension between the Ghanaian government and the IMF is only likely to escalate. The IMF's expectation for Ghana to restore its central bank's financial health is becoming increasingly difficult to reconcile with the government's refusal to inject direct capital into the Bank of Ghana. Ghana's financial strategy, which has leaned heavily on IMF-backed structural reforms in the past, now faces its biggest test. The IMF's role in Ghana has been primarily as a lender of last resort, but it also exerts significant influence on fiscal policy, particularly in times of economic distress. The IMF's insistence on a recapitalization plan for the central bank comes at a time when Ghana's economy is already under considerable strain. With inflation soaring, the cedi weakening, and national debt climbing, Ghana faces an almost impossible balancing act between meeting the IMF's demands and addressing the pressing socioeconomic issues at home. In many respects, Ghana's predicament mirrors the experiences of other African countries that have sought IMF intervention during times of crisis. For instance, Nigeria's ongoing struggle with external debt management and inflation has also placed immense pressure on its central bank, which, like Ghana, has faced the dual challenge of managing national reserves while trying to stabilize the currency. Zambia's debt restructuring process has been drawn out over the years, with the IMF and other international creditors exerting significant pressure on the Zambian government to align its fiscal policies with international standards. For Ghana, however, the economic situation is exacerbated by the political landscape. In an environment of rising political tension, especially between the ruling government and opposition parties, the need for a rapid and effective resolution is even more critical. Ghana's credibility in the eyes of international lenders will largely depend on its ability to deliver a viable financial stabilization plan that resonates both with the IMF and the domestic population, who are increasingly feeling the effects of economic mismanagement. The role of regional cooperation, a broader African context. In light of Ghana's financial crisis, regional cooperation may play a significant role in mitigating the economic pressure the country faces. Ghana is a member of the Economic Community of West African States, ECOWAS, an organization designed to foster economic integration and stability among West African nations. While ECOWAS has not been involved directly in Ghana's bailout discussions, the crisis has underscored the importance of regional cooperation in addressing financial challenges that transcend national borders. In comparison, countries like Nigeria and Côte d'Ivoire have shown that regional cooperation can act as a buffer against economic instability. Both nations have formed strategic partnerships with the African Development Bank, AFDB, to implement infrastructure projects that stimulate growth while securing funding for other critical sectors. Additionally, these countries have worked with regional financial bodies to manage inflation and stabilize currencies, particularly during times of external shocks such as fluctuating commodity prices. If Ghana is to emerge from its current predicament, it may benefit from stronger ties with both regional and international financial institutions. While the IMF and the World Bank provide global financial support, the AFDB offers an African perspective on development and could provide more tailored financial solutions for Ghana's unique needs. By expanding its relationships within the region, Ghana may not only gain access to alternative financial solutions, but could also strengthen its political and economic influence within West Africa. The way forward. Balancing reforms with social responsibility. Looking ahead, Ghana's ability to navigate its economic crisis will depend on finding a balance between necessary fiscal reforms and social responsibility. The current crisis, while deeply concerning, offers an opportunity for the Ghanaian government to implement long-term reforms that can stabilize the economy, restore confidence in financial institutions, and foster a more resilient financial system. A key area for reform is the management of public debt. While Ghana's debt restructuring process through the Domestic Debt Exchange Program has been contentious, it has provided valuable lessons in the importance of transparency and effective debt management. Going forward, Ghana will need to establish more robust debt management frameworks that avoid over-reliance on external borrowing. Strengthening fiscal discipline will be critical, and the government will need to demonstrate its commitment to reducing the budget deficit while maintaining funding for essential services like education, healthcare, and infrastructure. In addition to fiscal reform, the government must work to restore public trust in the central bank. The Bank of Ghana, as the country's primary financial institution, has a pivotal role to play in stabilizing the economy. However, its independence and operational effectiveness have been called into question due to its financial troubles. Restoring the bank's credibility will require significant internal reforms, including enhanced governance, improved regulatory oversight, and increased transparency in its financial dealings. Furthermore, the Ghanaian government must also address the growing social unrest caused by the economic hardships facing the population. With rising unemployment, inflation, and a depreciating cedi, many Ghanaians are feeling the brunt of the crisis. The government must implement targeted social programs to mitigate the impact on vulnerable communities and ensure that the most disadvantaged do not bear the brunt of the economic adjustments. A fork in the road for Ghana. Ghana's financial crisis is a pivotal moment in the country's economic history. The government's rejection of the Bank of Ghana's bailout request and the suggestion to sell the central bank's headquarters have raised serious questions about the country's fiscal future and its relationship with international financial institutions. The rejection of the IMF-backed recapitalization plan signals that Ghana is at a crossroads where decisions made today will shape its economic trajectory for years to come. As Ghana contemplates the difficult path ahead, the key will be balancing necessary fiscal reforms with the socio-economic needs of its citizens. The involvement of the IMF, regional financial institutions, and the broader African community will be crucial in shaping a future that is not only financially sustainable, but also equitable for all Ghanaians. The economic pressures that Ghana faces are not unique. They reflect broader regional trends affecting many African nations. The lessons learned from Ghana's struggles will be valuable for other countries navigating similar challenges. If Ghana can manage to stabilize its economy and restore confidence in its financial institutions, it may emerge as a stronger, more resilient nation, a model for others facing the same financial storms. However, without the right balance of reforms, external support, and internal stability, Ghana risks further deepening its financial woes, which could have ripple effects throughout the West African region and beyond. The country stands at a crossroads, and the path it takes will determine its economic future for generations to come. Long-term economic strategy, a call for diversification. For Ghana to truly recover and rebuild its economy in a sustainable manner, it must diversify its sources of income and economic activity. The current over-reliance on the export of raw materials like gold, cocoa, and oil has left Ghana vulnerable to external shocks, such as fluctuating commodity prices. To protect itself from future financial crises, Ghana must focus on developing its domestic industries, particularly in sectors such as manufacturing, agriculture, and technology. The agricultural sector, while historically crucial to Ghana's economy, has suffered from inefficiencies, aging infrastructure, and limited access to financing. The government must address these issues by investing in modernizing agriculture, improving irrigation systems, and expanding access to markets both locally and internationally. This would not only enhance food security but also create new jobs and boost the country's export earnings. Equally important is the need to strengthen Ghana's manufacturing sector. Over the years, Ghana has struggled to build a strong manufacturing base, with many products being imported rather than locally produced. By incentivizing local businesses, improving infrastructure, and facilitating access to financing, Ghana can begin to shift towards becoming a regional manufacturing hub. Such diversification would allow the country to reduce its reliance on imports and provide much-needed employment for its growing population. Additionally, the government should explore the potential of the technology and innovation sectors. Ghana is home to a growing number of startups, especially in fintech, agriculture technology, and mobile app development. By creating a more conducive environment for innovation, through improved infrastructure, investment in education, and favorable policies, Ghana could foster a thriving tech ecosystem that could help mitigate the economic impact of external factors. The role of debt and economic sovereignty. Ghana's debt crisis highlights the broader issues of debt dependency that have affected many African countries. While loans and credit from international financial institutions like the IMF and World Bank can provide immediate relief, they often come with stringent conditions that can exacerbate existing challenges in the long term. The terms of these loans, including interest rates and repayment schedules, can place additional burdens on national budgets, stifling growth and increasing the risk of further debt crises. For Ghana, one of the key lessons emerging from this crisis is the need to pursue a more sovereign approach to economic management, which prioritizes national interests over external demands. This could involve seeking a more balanced approach to debt management, aiming for greater transparency, sustainability, and oversight in debt accumulation. Debt restructuring, if done poorly, can result in a vicious cycle of dependency on external financial institutions and further erosion of economic autonomy. Countries like Rwanda have begun to adopt strategies of self-reliance and focused investments in local industries to reduce their dependence on external debt. Ghana can take a page from Rwanda's playbook, which has managed to achieve strong economic growth through diversification, investment in local enterprises, and regional integration. Rwanda's emphasis on technology and entrepreneurship as key drivers of economic growth offers another potential path forward for Ghana. For Ghana, economic sovereignty means increasing local production capacities, enhancing domestic financial systems, and curbing the outflow of foreign currency. The establishment of more robust financial institutions and mechanisms, including the strengthening of Ghana's capital markets, could serve as a significant stepping stone toward ensuring a more resilient and independent economy. Managing political stability during economic strain. As Ghana navigates its economic challenges, political stability will be crucial. The nation's democratic institutions, while robust in comparison to many of its regional peers, must continue to function effectively amidst the strain of fiscal austerity and public unrest. In recent years, Ghana's political system has been relatively stable, but the economic difficulties have put significant pressure on both the government and opposition. With public dissatisfaction rising, it is important for political leaders to demonstrate unity and provide clear, transparent communication regarding the steps being taken to address the crisis. There is also a significant need for strengthening governance and transparency within the public sector. The public's trust in government institutions, particularly in light of economic difficulties, is vital. Greater oversight and accountability in government spending, as well as in the management of state-owned enterprises, would help reduce perceptions of corruption and inefficiency, which have often been associated with economic mismanagement in many African countries. Moreover, the opposition plays an important role in ensuring that the government remains accountable. In Ghana, political competition has historically been healthy, and the opposition has been an effective check on government policies. However, the heightened political tensions arising from economic hardships could polarize the nation if not carefully managed. Both the government and the opposition must focus on uniting the country around the shared goal of stabilizing the economy and ensuring that the financial burden does not disproportionately affect the most vulnerable. Regional and global partnerships. Opportunities for collaborative solutions. While Ghana's crisis is significant, it also provides an opportunity for deeper collaboration with its African neighbors and the broader global community. As a member of the African Union, AU, and the West African Economic and Monetary Union, WAMU, Ghana stands to benefit from stronger regional cooperation in addressing economic challenges. The economic integration efforts within the AU could offer Ghana a path towards securing regional support, particularly in areas like trade, infrastructure development, and financial cooperation. For example, Ghana's regional partners, including Côte d'Ivoire, Nigeria, and Burkina Faso, could offer valuable insights into effective debt management and infrastructure investment strategies. In turn, Ghana could provide regional leadership in the areas of governance, democratic reform, and financial regulation, strengthening its position within West Africa and the broader African continent. On a global scale, the partnerships Ghana maintains with the IMF, World Bank, and African Development Bank will be critical in securing the funding necessary for long-term recovery. However, it is equally important that Ghana works toward diversifying its external relationships, engaging more actively with emerging economies, particularly in Asia and the Middle East, could help Ghana access new sources of investment and financial support. China's Belt and Road Initiative, BRI, for example, could provide an opportunity for Ghana to secure infrastructure development funding, especially in critical areas like transportation, energy, and telecommunications. Similarly, deeper trade relationships with countries like India and Brazil could offer Ghana new export markets for its products, diversifying its economic ties and reducing dependence on traditional Western markets. The role of multilateral institutions, such as the African Export-Import Bank, Afreximbank, in providing affordable financing and fostering intra-African trade, could also provide an alternative to traditional financial institutions. Strengthening these relationships, particularly within the African continent, could help Ghana reduce its dependency on global creditors and foster a more self-sustaining economy. The public's role: grassroots solutions to economic challenges. Finally, the public's role in addressing Ghana's economic crisis cannot be overstated. Civil society, the private sector, and grassroots organizations must be brought into the conversation regarding the country's future direction. Ensuring that the voices of ordinary Ghanaians are heard is essential, particularly when it comes to policy reforms that will affect their livelihoods. In many countries, including Ghana, economic decisions are often made by a small group of political elites with a limited consultation with the broader population. However, the long-term success of any recovery strategy depends on the active involvement of citizens at all levels of society. From community leaders to business owners, every stakeholder must be engaged in the reform process to ensure that the country's recovery is inclusive and equitable. Given the strength of Ghana's vibrant civil society, there are significant opportunities to mobilize public support for the necessary reforms. Non-governmental organizations, NGOs, youth groups, and other advocacy organizations can play a key role in raising awareness of the challenges ahead while also providing practical solutions. A nationwide dialogue on the country's economic future could be an effective way to unite the public behind a shared vision for recovery. Ghana's future lies in its ability to unite all sectors of society, government, business, civil society, and the international community towards a common goal of financial stability and sustainable economic growth. By finding solutions from within its borders, engaging in regional and global partnerships, and ensuring that the public plays an active role in the reform process, Ghana can lay the foundation for a more resilient and prosperous future. The impact of external shocks: navigating global economic trends. As Ghana seeks to stabilize its financial system, it must also contend with the broader global economic trends that are impacting many developing countries, particularly in Africa. The global economic environment is constantly shifting, with factors such as rising interest rates, fluctuating commodity prices, and supply chain disruptions playing a pivotal role in shaping economic outcomes. Ghana, like many other African countries, is not immune to the ripple effects of these global challenges. One of the key challenges Ghana faces is the impact of rising global interest rates. In response to inflationary pressures, central banks in major economies, such as the United States Federal Reserve and the European Central Bank, have raised interest rates. These hikes have led to increased borrowing costs, which pose a significant challenge for countries like Ghana that rely on external debt to finance development. As Ghana looks to recover and rebuild, the cost of servicing its external debt will increase, putting additional strain on the national budget. Furthermore, Ghana's dependence on exports of primary commodities such as gold, cocoa, and oil leave the economy vulnerable to price fluctuations on the international markets. In recent years, the prices of these commodities have been volatile, with global supply chain disruptions caused by factors like the COVID-19 pandemic and the ongoing war in Ukraine. These disruptions have led to a decrease in demand for some of Ghana's key exports, further exacerbating the country's financial challenges. Rising inflation in major global economies also has an impact on Ghana's ability to manage its own inflationary pressures. As the cost of imports rises, Ghana faces the dual challenge of managing domestic inflation while securing the necessary imports for its economy. The interplay between global inflationary pressures and domestic inflation creates a perfect storm for the country's already fragile economic situation. This highlights the importance of Ghana diversifying its economy away from its dependence on commodity exports, as well as its reliance on external debt. Leveraging technology and innovation for economic resilience. Despite the challenges posed by global economic trends, Ghana has an opportunity to turn the tide through innovation and the adoption of technology. The country has already shown signs of growth in the tech sector, particularly in fintech, agriculture technology, and mobile applications. These sectors present significant potential for economic transformation and can serve as engines of growth, providing employment and fostering domestic industries. The fintech sector has witnessed rapid growth in Ghana, with mobile money services playing a central role in financial inclusion. As mobile money and digital payments become more widespread, they provide opportunities to enhance financial access for underserved populations. The ability to offer affordable, accessible financial services to the broader population could promote economic participation and stimulate entrepreneurial activity. Ghana's agricultural sector, which remains one of the largest contributors to the economy, can also benefit from technological innovation. Precision agriculture, which uses data analytics, satellite technology, and drones to optimize farming practices, could transform the agricultural landscape. By improving yields and reducing waste, such technologies can help Ghana ensure food security, enhance export potential, and create sustainable jobs for its growing population. Additionally, linking smallholder farmers to digital markets can open new revenue streams and reduce dependency on traditional trade routes. Tech startups focused on solving local challenges, such as access to clean water, healthcare, and energy, can further stimulate economic growth. Government support for the tech ecosystem through targeted policies and incentives could accelerate the development of such innovations. By investing in a robust innovation ecosystem, Ghana can develop homegrown solutions to its most pressing challenges and reduce reliance on external technologies. Strengthening public-private partnerships for development. Public-private partnerships, PPPs, have emerged as an important strategy for financing large-scale infrastructure projects in Ghana and many other African countries. These collaborations between the government and private sector players can help bridge the financing gap for critical projects that are essential for economic development. By leveraging private capital, Ghana can address some of its most urgent infrastructure needs, such as upgrading transportation networks, expanding energy generation capacity, and improving healthcare facilities. PPPs in Ghana have already been successfully implemented in sectors such as energy and transportation. The development of independent power plants, IPPs, has helped alleviate some of the country's energy shortages, and the government has worked with private firms to improve road infrastructure. However, these initiatives often face challenges related to financing, transparency, and regulatory frameworks. To expand the scope of PPPs, Ghana must establish a clear and consistent regulatory environment that attracts private investment while protecting public interests. For example, in the energy sector, where Ghana faces the challenge of balancing demand with supply, the government could work with private sector players to build renewable energy capacity, such as solar and wind farms. This would not only meet growing energy demands but also align with global trends towards sustainable energy practices. By encouraging foreign direct investment in clean energy projects, Ghana can create long-term economic benefits, attract capital, and help mitigate the environmental impact of its energy consumption. PPP models could also be applied to other critical sectors, such as education and healthcare. In these areas, private sector involvement can help enhance service delivery, improve infrastructure, and bring innovative solutions to long-standing challenges. By fostering a collaborative approach between the public and private sectors, Ghana can maximize its development potential and improve the quality of life for its citizens. The role of the African Continental Free Trade Area, AFCFTA. As Ghana seeks to recover from its economic crisis, the African Continental Free Trade Area, AFCFTA, offers a significant opportunity for regional economic integration. The AFCFTA, which aims to create a single market for goods and services across the African continent, could provide Ghana with access to new export markets and opportunities for economic growth. For Ghana, which is strategically located within the West African region, the AFCFTA provides access to a market of over 1.2 billion people with a combined GDP of over $3 trillion. By leveraging this free trade area, Ghana can expand its export potential, especially in non-traditional sectors like manufacturing and agro-processing. In addition, the free movement of goods and services could reduce trade barriers and lower costs for businesses operating in Ghana, making the country a more attractive destination for foreign investment. However, realizing the full benefits of the AFCFTA requires addressing key challenges such as infrastructure gaps, regulatory harmonization, and trade facilitation. The government must ensure that the country's infrastructure, particularly in transportation and logistics, is developed to support increased trade flows. Furthermore, Ghana will need to work with its regional partners to establish common standards and trade policies that ensure the smooth flow of goods across borders. As other African countries are also vying to strengthen their economic positions through regional integration, Ghana's active participation in the AFCFTA will be critical. By capitalizing on its strategic location, access to regional markets, and competitive industries, Ghana can position itself as a leading player in Africa's economic transformation. A crucial moment for Ghana's future. Ghana's current economic crisis is a stark reminder of the challenges faced by many African nations in the face of global economic volatility, internal mismanagement, and heavy reliance on external debt. The government's rejection of the Bank of Ghana's bailout request and the suggestion to sell its headquarters only underscore the severity of the situation. However, the crisis also presents an opportunity for Ghana to rethink its economic strategy, diversify its sources of income, and build a more resilient economy. By embracing technological innovation, strengthening public-private partnerships, and actively engaging in regional and continental integration efforts like the AFCFTA, Ghana can create a more stable and sustainable future. However, this will require concerted efforts from all sectors of society, government, businesses, civil society, and citizens to ensure that the reforms and initiatives undertaken benefit all Ghanaians, particularly those who have been most affected by the economic crisis. How Ghana navigates this turbulent period will determine not only its economic future, but also its ability to serve as a model for other African countries facing similar challenges. As the nation looks toward recovery, the lessons learned during this crisis must shape its approach to governance, fiscal policy, and economic management in the years to come. The importance of strengthening institutional capacity. One of the critical elements in Ghana's long-term economic recovery is the strengthening of its institutional capacity. The government's ability to implement reforms, manage public finances efficiently, and ensure that public resources are allocated effectively will determine the success of the country's recovery efforts. Institutional weaknesses, such as corruption, lack of transparency, and inefficiency in public service delivery, have plagued Ghana in the past and contributed to the current crisis. Therefore, improving the effectiveness of key institutions is essential to achieving sustained growth and development. A major area for institutional reform is the public financial management system. Ghana must ensure that public funds are used effectively and that the government can track and control spending. This can be achieved through better oversight, the introduction of more robust auditing mechanisms, and the establishment of independent bodies that hold public officials accountable for their actions. Strengthening institutions like the Ministry of Finance, the Bank of Ghana, and the Public Procurement Authority will help ensure that government spending aligns with long-term development goals and that any financial mismanagement is identified and addressed swiftly. In addition to financial management, strengthening the legal and judicial systems is critical to creating a business-friendly environment and ensuring fair governance. Ghana must work to address the challenges that currently hinder its legal and regulatory frameworks, such as delays in court cases, unclear property rights, and cumbersome business registration processes. A more efficient and transparent legal system will not only improve confidence in the country's institutions, but also attract foreign investment, which is key to economic recovery. Education and workforce development, preparing for the future. For Ghana's economy to be resilient in the long term, the country must invest in education and workforce development. A highly skilled and adaptable workforce is essential for driving growth in key sectors, particularly in technology, manufacturing, and agriculture. However, despite notable progress in improving access to education, there remain significant gaps in the quality of education and training available to students, especially in rural areas. To address these gaps, Ghana must focus on improving the quality of its education system, with a particular emphasis on technical and vocational education and training, TVET. A stronger TVET system would equip young people with the skills needed to thrive in a modern economy, providing a steady stream of skilled workers to meet the demands of industries like construction, technology, and healthcare. By aligning educational curricula with the needs of the private sector, Ghana can create a workforce that is better prepared for the jobs of the future. Moreover, fostering a culture of innovation and entrepreneurship is equally important. The Ghanaian government should work with the private sector to establish incubation centers, provide access to funding, and offer mentorship programs for aspiring entrepreneurs. The country's growing startup ecosystem, particularly in sectors such as fintech, agriculture technology, and mobile communications, has the potential to contribute significantly to economic growth and job creation. By supporting entrepreneurship, Ghana can cultivate a dynamic economy driven by innovation and local solutions, regional integration, building stronger connections within Africa. As Ghana seeks to stabilize its economy, regional integration will play an increasingly important role. The African Continental Free Trade Area, AFCFTA, offers Ghana a unique opportunity to expand its trade with other African nations, promoting economic growth and diversification. Ghana's geographic location in West Africa positions it as a natural hub for regional trade and investment. However, for Ghana to fully capitalize on the AFCFTA, it must overcome several challenges, such as infrastructure bottlenecks, trade barriers, and regulatory inconsistencies between African nations. One of the key ways Ghana can enhance its role in regional integration is by investing in infrastructure projects that improve transportation, energy, and digital connectivity across borders. Improving regional infrastructure would facilitate the movement of goods, reduce trade costs, and make Ghana a more attractive destination for investment. The construction of roads, railways, and ports linking Ghana with neighboring countries would enable the efficient movement of products to markets across West Africa, enhancing the country's position as a regional trade leader. Additionally, Ghana's involvement in the AFCFTA should go beyond trade. Ghana can serve as a leader in advocating for greater economic integration, not just through trade agreements, but also through collaborative projects in key areas such as energy, agriculture, and technology. Regional economic cooperation will enable Ghana to tap into collective strengths, including the sharing of resources and expertise across the continent. Through enhanced regional collaboration, Ghana could also play a role in resolving broader challenges faced by West Africa, such as security concerns, climate change, and food security. Regional cooperation could create a more stable and prosperous environment which would benefit Ghana's economy as well as the entire West African region. Leveraging the diaspora, a key to economic growth. Another avenue for economic recovery lies within the Ghanaian diaspora, which is one of the largest in Africa. The remittances sent by Ghanaians living abroad have been a crucial source of foreign exchange for the country, helping to stabilize the cedi and support households. However, beyond remittances, the Ghanaian diaspora represents a potential untapped resource for economic development. Ghana has already taken steps to engage its diaspora through initiatives like the Year of Return, which saw thousands of African Americans visit Ghana to reconnect with their roots. This initiative boosted tourism and generated significant revenue for the country. However, there is much more that can be done to mobilize the diaspora as a key player in Ghana's economic transformation. The government should focus on building stronger connections with the diaspora through targeted policies that facilitate investment, knowledge transfer, and the creation of business networks. For example, Ghana could create a special investment fund that encourages diaspora Ghanaians to invest in key sectors such as agriculture, real estate, and technology. By offering incentives such as tax breaks or access to favorable financing, the government could attract diaspora investment and expertise, which would have a multiplier effect on the local economy. Additionally, Ghana can benefit from the skills and knowledge that its diaspora possesses. Many Ghanaians living abroad have expertise in various fields, including technology, finance, healthcare, and engineering. By creating opportunities for these professionals to return home or work remotely with local businesses, Ghana can tap into their valuable expertise, which can accelerate the country's development. Establishing a more structured approach to diaspora engagement will be essential for leveraging this potential. Sustainability and environmental considerations. As Ghana works to recover from its economic challenges, it must also consider the environmental sustainability of its growth trajectory. Africa is one of the most vulnerable regions to climate change, and Ghana is no exception. Rising temperatures, changing rainfall patterns, and the increased frequency of extreme weather events such as floods and droughts pose significant risks to the country's agriculture, infrastructure, and energy systems. To ensure that its economic recovery is sustainable, Ghana must prioritize climate-resilient development. This includes investing in renewable energy, promoting sustainable farming practices, and ensuring that infrastructure projects are designed to withstand the impact of climate change. Additionally, Ghana could look to regional and international partnerships to address climate challenges. The African Development Bank and other organizations have been pushing for greater investments in green technologies, and Ghana can benefit from these efforts by prioritizing climate-friendly projects. Ghana's transition to a green economy will also require support from the private sector. Businesses must be encouraged to adopt sustainable practices, whether in the form of renewable energy adoption, waste management, or the promotion of eco-friendly products. Government incentives for green businesses and the development of green finance markets will be important steps toward achieving a sustainable economic recovery. The road ahead for Ghana. The challenges faced by Ghana are substantial, but they are not insurmountable. By diversifying its economy, improving institutional capacity, fostering innovation, and strengthening regional and international partnerships, Ghana can chart a path to sustainable recovery and growth. While the immediate focus is on managing the financial crisis and stabilizing the economy, it is equally important that the country looks toward the future and lays the groundwork for long-term prosperity. In navigating this crisis, Ghana has the potential to emerge as a leader in Africa's economic transformation. By embracing structural reforms, engaging the diaspora, prioritizing environmental sustainability, and positioning itself as a hub for regional economic cooperation, Ghana can create a resilient economy that benefits all its citizens. The lessons learned from this crisis, if applied correctly, will not only ensure a brighter future for Ghana, but could also serve as a model for other African nations facing similar economic challenges. The role of innovation in public administration. As Ghana moves towards long-term economic recovery, innovation in public administration will be essential. One of the recurring challenges that have hindered Ghana's economic progress is the inefficiency within public services and governance structures. Strengthening public administration systems will not only enhance service delivery, but also contribute to fiscal discipline and accountability in managing the national budget. Given the technological advancements in public administration globally, Ghana must leverage digital transformation to streamline government operations and improve transparency. E-government initiatives have proven to be highly effective in several African countries, where digital platforms are used to deliver public services efficiently and reduce corruption. Ghana can adopt similar initiatives to improve the delivery of essential services, such as healthcare, education, and social welfare programs. By digitizing key government services and implementing e-government platforms, Ghana can ensure that citizens have easier access to services while reducing the administrative burden on government workers. Additionally, e-governance helps reduce opportunities for corruption as processes become more transparent and auditable. Moreover, the Ghanaian government could invest in creating a more robust and transparent public procurement system. Corruption and mismanagement of public resources are often exacerbated by opaque procurement practices, leading to inefficiencies and the misallocation of funds. A digitized and transparent public procurement system will allow for better management of government contracts, ensuring that public projects are completed on time and within budget. Strengthening the private sector, encouraging investment and entrepreneurship. For Ghana's economic recovery to be successful, the private sector must be seen as a key partner in the growth process. The private sector in Ghana, particularly small and medium-sized enterprises, SMEs, has enormous potential to drive economic growth, create jobs, and stimulate innovation. However, for this sector to realize its potential, it requires an enabling environment that supports business creation, expansion, and investment. The government can help strengthen the private sector by implementing policies that reduce the cost of doing business. For example, simplifying the process of starting and running a business, reducing bureaucracy, and offering tax incentives for new businesses can encourage entrepreneurship and attract investment. Furthermore, access to finance remains one of the most significant challenges for small businesses in Ghana. The government, alongside the private financial sector, should look for ways to improve access to affordable credit, particularly for startups and SMEs. Creating venture capital funds, credit guarantee schemes, and microfinance institutions can provide the necessary financial support for entrepreneurs to thrive. Another key area for promoting private sector growth is improving the ease of doing business. Ghana should prioritize reforms that streamline business registration processes, reduce the regulatory burden, and ensure that contracts are enforced fairly and transparently. By improving its business environment, Ghana will attract both domestic and foreign investments, which can accelerate the recovery process and create much-needed jobs in the economy. Furthermore, fostering innovation in sectors such as agriculture, manufacturing, and technology will require greater investment in research and development. The government should partner with private companies, academic institutions, and development organizations to encourage technological innovation that can contribute to economic diversification. Startups that focus on solving local challenges, such as energy access, waste management, or agricultural productivity, could play a significant role in economic transformation. Addressing the informal sector, formalizing the backbone of the economy. In many African economies, including Ghana, the informal sector plays a significant role in employment and economic activity. The informal sector in Ghana is large, with many people engaged in subsistence farming, street vending, and small-scale trading. While the informal sector contributes to economic output, it also limits productivity growth and restricts the government's ability to collect taxes effectively. One of the main challenges for the informal sector in Ghana is its lack of access to formal financial services, social protection, and other government support. To ensure that the informal sector is not left behind in the broader economic recovery, Ghana must look for ways to bring these workers into the formal economy. One way to do this is by simplifying the process of registering informal businesses, reducing the barriers to entry, and providing tax incentives for businesses to formalize. In doing so, the government can help the informal sector access the benefits of financial services, insurance, and social security while increasing tax revenues. Additionally, there should be efforts to improve the education and skills of workers in the informal sector. By offering vocational training programs and entrepreneurship education to informal sector workers, the government can help them improve their productivity and increase their earning potential. These efforts would not only lift individuals and families out of poverty, but also contribute to the broader goal of economic transformation. The government can also partner with microfinance institutions and local development organizations to provide affordable loans and grants to micro-entrepreneurs in the informal sector. This financial support will enable these businesses to grow, hire more workers, and expand their market reach. In time, as more informal businesses formalize, Ghana can create a stronger, more resilient economy. Boosting the tourism industry, capitalizing on Ghana's rich cultural heritage. Another area that Ghana can explore for economic recovery is its tourism sector. Ghana's rich history, vibrant culture, and natural beauty make it an attractive destination for international and regional tourists. The country's potential for tourism growth is significant, especially as the global travel industry continues to recover from the impacts of the COVID-19 pandemic. Ghana can capitalize on its cultural heritage by promoting heritage tourism, ecotourism, and cultural events. The country is home to UNESCO World Heritage Sites such as the Cape Coast Castle and the slave trade forts along the Atlantic coast, which tell the poignant history of the transatlantic slave trade. The government could work to further promote these historical sites, as well as traditional festivals, arts, and crafts to draw tourists from around the world. Additionally, Ghana's natural resources, including its national parks, forests, and coastal areas, offer opportunities for ecotourism. The country could invest in eco-friendly tourism infrastructure, such as sustainable hotels and nature reserves, to attract environmentally conscious travelers. Strengthening the tourism infrastructure, improving connectivity, and providing incentives for private investment in the sector will be crucial for realizing its full potential. Ghana's tourism industry could also benefit from the growing trend of African diaspora tourism, where people of African descent visit their ancestral countries. The success of the Year of Return initiative in 2019 demonstrated the strong desire among African Americans and other members of the diaspora to reconnect with their roots. Building on this momentum and creating more opportunities for diaspora engagement can further boost tourism numbers, bring in foreign exchange, and promote cultural exchange. The path to economic recovery, coordination, and execution. Ultimately, Ghana's ability to recover from its current crisis depends on how well the government can coordinate and execute its recovery plan. The crisis presents an opportunity for broad, sweeping reforms across multiple sectors, and the government must demonstrate the political will to make these changes. Public-private collaboration, investment in key sectors, and a commitment to sound governance practices will be necessary for the country to emerge stronger. Moreover, the government must ensure that its economic recovery plans are inclusive and equitable. While it is essential to address the immediate fiscal crisis, Ghana must also focus on the long-term welfare of its citizens, particularly those in vulnerable communities. A broad-based recovery strategy that includes the poor, youth, and marginalized groups will ensure that the benefits of economic recovery are felt across society. Ghana's economic recovery is possible, but it will require a multifaceted approach. From reforming public administration and strengthening the private sector to investing in the informal economy and promoting tourism, Ghana has a range of strategies at its disposal to drive recovery and growth. With the right mix of reforms, regional cooperation, and investment in human capital, Ghana can navigate its way out of the current crisis and build a more resilient and prosperous future for all its citizens. Strengthening the role of women in economic development. As Ghana seeks to recover from its financial challenges, it is crucial to recognize and strengthen the role of women in driving economic development. Women in Ghana, particularly in rural areas, play a significant role in the agricultural sector, family businesses, and local economies. However, they often face significant barriers to accessing resources, financing, and opportunities for growth. To ensure a more inclusive recovery, it is essential to empower women, particularly those in entrepreneurship and agriculture, to contribute fully to the economic process. One of the key areas for boosting women's economic participation is access to finance. Many women, particularly those in the informal sector, face difficulties in obtaining credit to grow their businesses. Financial institutions should be encouraged to create products specifically tailored to the needs of women entrepreneurs, offering low-interest loans, flexible repayment terms, and mentorship programs. Government programs could also be implemented to provide women with seed capital for starting and expanding small businesses, particularly in sectors like agriculture, retail, and manufacturing. Furthermore, enhancing women's access to education and skills training is essential for their participation in more advanced sectors like technology, finance, and industry. The government, along with private sector partners, should prioritize programs that encourage women to pursue careers in these high-growth industries, which are vital for the future of the Ghanaian economy. Additionally, gender-sensitive policies in the workplace, such as maternity leave, equal pay, and workplace flexibility, will go a long way toward creating an environment where women can thrive professionally and economically. In rural areas, where women are often involved in agriculture and small-scale farming, initiatives to improve agricultural productivity and sustainability will be particularly impactful. Empowering women farmers with modern farming techniques, access to better seeds, and sustainable farming practices can improve food security while also raising the income levels of rural communities. The provision of training on crop diversification, better irrigation methods, and organic farming practices will help women farmers increase yields and build resilience to climate change. Furthermore, linking these women to larger markets through digital platforms or cooperatives will allow them to increase their bargaining power and access fair prices for their goods. Harnessing the power of education and digital transformation. Another crucial pillar of Ghana's economic recovery strategy is the expansion of education and digital transformation. The future economy of Ghana will rely heavily on a young, educated, and digitally skilled workforce capable of adapting to the demands of the modern global economy. Ghana already has a relatively young population, and the potential for a demographic dividend exists, but this will only materialize if the education system is reformed to meet the demands of a rapidly evolving job market. One immediate step towards this future is investing in STEM, science, technology, engineering, and mathematics, education at all levels. These fields are where the future economic opportunities will be, especially in sectors like technology, renewable energy, and advanced manufacturing. In the past, Ghana's education system has been criticized for not equipping students with the skills necessary to thrive in the modern economy. By improving the quality of education and integrating modern teaching methods, Ghana can foster a new generation of innovators and entrepreneurs capable of driving economic change. Digital education platforms and e-learning can also help bridge the gap for students in rural areas who may not have access to quality schools and teachers. The COVID-19 pandemic highlighted the importance of digital learning, and while there were challenges in providing equitable access, there is still enormous potential for e-learning to improve educational outcomes. The government should work to expand internet access, particularly in rural areas, and invest in the infrastructure needed to support digital learning. Partnerships with global tech companies and NGOs could help bring affordable devices and online learning content to underserved communities. As part of the broader digital transformation, The government should continue to promote digital literacy and foster the growth of tech hubs across the country. By encouraging the development of tech startups and creating a supportive ecosystem for innovation, Ghana can become a leader in the African tech space. Encouraging the private sector to invest in digital infrastructure, such as data centers and broadband connectivity, is key to ensuring that Ghana's economy becomes more digitally inclusive. Ghana's tech-savvy youth could become the driving force behind the nation's growth in industries such as fintech, artificial intelligence, and mobile app development. Fostering innovation through research and development, R&D. For Ghana to truly position itself as a global player in the future economy, it must place a greater emphasis on research and development, R&D. Innovation is at the heart of economic diversification, and R&D is the key to creating new technologies, improving existing industries, and discovering more efficient ways to produce goods and services. While Ghana has made strides in sectors like agriculture and manufacturing, there is still significant room for growth through R&D in technology, energy, and natural resource management. Sectors like renewable energy, biotechnology, and health tech offer exciting opportunities for Ghana to leapfrog traditional industries and drive sustainable development. The government can incentivize R&D through tax breaks, grants, and research partnerships with universities, international organizations, and the private sector. Public research institutions, such as universities and research centers, can become hubs for innovation if given the necessary resources and support. Collaborations between the public and private sectors will ensure that research leads to practical applications that benefit both the economy and society. For example, Ghana has an abundance of natural resources, including gold, bauxite, and timber, but innovation in mining and resource extraction technologies can increase the value of these commodities. The introduction of greener, more sustainable mining technologies will also reduce environmental impacts, aligning Ghana's development goals with global sustainability initiatives. This, in turn, could increase demand for Ghana's resources from international markets that are increasingly focused on environmental, social, and governance (ESG) criteria. In the energy sector, R&D could help Ghana transition from a dependence on fossil fuels to a more sustainable energy mix, with increased investment in solar, wind, and hydropower. The development of local technologies that harness the country's abundant renewable energy resources would not only reduce Ghana's carbon footprint, but also position the country as a regional leader in clean energy production. By fostering a culture of innovation and placing a strong emphasis on R&D, Ghana can move towards becoming a knowledge-based economy that can compete in the global marketplace. Exploring new export markets, diversifying trade relationships. As Ghana works toward economic recovery, it must diversify its trade relationships and expand into new markets. Historically, Ghana's exports have been focused on a few key markets in Europe and North America, but this limited trade base has made the country vulnerable to external shocks, such as changes in demand or tariffs. Ghana must prioritize building stronger trade relationships with other emerging markets, particularly in Asia, Latin America, and the Middle East. For example, Ghana could explore increasing exports to China, India, and Brazil, which have large and growing consumer markets. These countries have shown interest in African goods, particularly natural resources and agricultural products. By diversifying its export markets, Ghana can reduce its reliance on a small number of trade partners and mitigate the risks associated with global economic fluctuations. Additionally, Ghana should take full advantage of the African Continental Free Trade Area, AFCFTA, to open new intra-Africa trade opportunities. The African market, with a population of over 1.2 billion people, offers vast opportunities for growth in sectors such as agriculture, manufacturing, and services. By strengthening regional trade agreements and reducing intra-African trade barriers, Ghana can increase its share of the continent's growing demand for consumer goods, processed food, and manufactured products. The AFCFTA offers Ghana the opportunity to serve as a regional hub for trade, with improved access to markets across Africa. Strengthening the country's export capacity will require investment in infrastructure, such as port facilities, storage, and logistics. Efficient supply chains and transportation networks will be critical in ensuring that Ghana can meet demand in emerging markets and enhance the competitiveness of its exports. The government must continue to improve the business climate, reduce bureaucratic barriers, and incentivize the private sector to invest in export-oriented industries. Ghana's vision for the future Ghana stands at a crossroads in its economic journey. While the challenges are significant, there is tremendous potential for the country to build a resilient, diversified, and sustainable economy. By focusing on innovation, strengthening governance, empowering women, investing in human capital, and fostering regional and global trade relationships, Ghana can navigate its current crisis and emerge stronger. The road to recovery will require coordination, determination, and commitment from all sectors of society, government, private sector, civil society, and citizens. With the right policies, strategic investments, and a clear vision for the future, Ghana can achieve long-term economic growth that benefits all its people. Through inclusive development, technological advancement, and greater regional integration, Ghana has the opportunity to shape its own destiny and become a model of economic transformation for Africa. Building resilience through financial inclusion. A crucial component of Ghana's long-term economic strategy must be the expansion of financial inclusion. Ensuring that all segments of the population have access to affordable financial services is essential for empowering individuals and businesses to participate fully in the economy. While there has been significant progress in recent years, especially with mobile money and digital financial services, there is still a considerable portion of the population that remains unbanked or underbanked, particularly in rural areas. Expanding access to financial services is vital for supporting small businesses, which are the backbone of Ghana's economy. Many small-scale entrepreneurs struggle to access financing due to the lack of formal credit histories or collateral. To address this, the government, in collaboration with financial institutions, could introduce innovative products such as microfinance loans, savings plans, and insurance products tailored to the needs of informal sector workers and small businesses. Mobile money platforms, which have already revolutionized financial transactions in Ghana, could be further utilized to offer accessible credit and savings options to people who previously had no access to traditional banking services. Moreover, fostering financial literacy is a critical component of financial inclusion. Many Ghanaians, especially in rural areas, may not fully understand how to manage their finances, take out loans, or invest in savings. By implementing national programs that focus on financial education, Ghana can empower its citizens to make informed decisions, improve their financial well-being, and contribute more effectively to the country's economy. Schools, community organizations, and digital platforms can all be used to reach a broad audience and promote financial literacy from an early age. Building a resilient financial system that caters to all citizens will also require a stronger regulatory framework. The government must continue to work closely with regulatory bodies like the Bank of Ghana to ensure that the financial sector remains robust and that consumer protection is prioritized. Strengthening the regulatory environment will help build trust in the financial system and attract further investment from both domestic and international markets. The importance of climate adaptation for long-term stability. Ghana's vulnerability to the impacts of climate change has become an urgent issue, particularly for sectors such as agriculture, energy, and coastal communities. Climate change has already led to more frequent and severe weather events, including floods, droughts, and rising sea levels, all of which threaten livelihoods, food security, and infrastructure. Addressing climate change is not only an environmental necessity, but also an economic one, as the country's economic future is closely tied to its ability to adapt to these changes. Ghana must prioritize climate adaptation strategies to ensure the long-term sustainability of its economy. These strategies should include sustainable agricultural practices, disaster risk management, and the promotion of green energy solutions. For instance, climate-smart agriculture techniques, which incorporate efficient water use, soil conservation, and crop diversification, can help farmers adapt to changing weather patterns and maintain productivity. Additionally, expanding renewable energy sources such as solar, wind, and hydropower can reduce Ghana's reliance on fossil fuels, mitigate the effects of climate change, and create new job opportunities in green industries. In coastal areas, where rising sea levels threaten livelihoods, infrastructure, and tourism, Ghana must invest in flood defenses and coastal protection measures. The construction of seawalls, mangrove restoration, and other protective infrastructure will not only safeguard communities, but also protect the vital tourism and fishing industries. Urban planning must also consider the effects of climate change, with cities like Accra focusing on building resilient infrastructure, improving waste management systems, and developing green spaces. Ghana's leadership in addressing climate change can also be a model for other African nations. By advocating for increased climate finance, securing international partnerships, and integrating climate change mitigation into national development plans, Ghana can position itself as a leader in sustainable development. This would open the door to new funding opportunities, increase access to international climate finance, and attract investment from global firms that are committed to sustainability. Enhancing healthcare and public health systems. In the wake of the COVID-19 pandemic, the importance of robust healthcare systems has never been clearer. For Ghana to achieve sustainable economic growth, it must build a resilient healthcare system that can effectively respond to public health emergencies, reduce the burden of disease, and improve the overall health and productivity of its population. Healthcare reform should focus on increasing the accessibility, affordability, and quality of healthcare services across the country. This includes improving healthcare infrastructure, especially in rural areas, where access to medical services is often limited. The government must invest in building and equipping health centers, ensuring that they are properly staffed and supplied with essential medications and medical equipment. Additionally, Ghana must continue its focus on universal health coverage, ensuring that all citizens, regardless of their income or location, have access to affordable health care. The National Health Insurance Scheme, NHIS, has made significant strides in providing coverage for a large portion of the population, but there is still work to be done to ensure that everyone benefits from the system. Expanding coverage, reducing the out-of-pocket expenses for patients, and improving the efficiency of the NHIS will help Ghana achieve a healthier population. Public health interventions should also focus on preventive care, including vaccination programs, health education, and addressing the social determinants of health, such as sanitation, nutrition, and clean water. By promoting healthy lifestyles and reducing the prevalence of diseases like malaria, tuberculosis, and non-communicable diseases, Ghana can reduce the strain on its healthcare system and improve the overall productivity of its workforce. Moreover, strengthening public health research and data collection systems will help Ghana respond more effectively to emerging health threats. By investing in disease surveillance, improving health data systems, and building the capacity of public health professionals, Ghana can enhance its ability to track, manage, and prevent future public health crises. Improving infrastructure, a gateway to economic growth. Infrastructure development is one of the key drivers of economic growth, and Ghana must invest in modernizing its infrastructure to support future growth. Infrastructure projects, such as roads, bridges, railways, and ports, are crucial for enhancing connectivity, reducing transportation costs, and facilitating trade. Ghana's position in West Africa makes it a key player in regional trade, and improving its transportation infrastructure will enable the country to become a more efficient logistics hub for the continent. The government should prioritize the completion of major road networks, particularly in rural and remote areas, where infrastructure deficiencies limit access to markets and services. Additionally, improving the national railway system can reduce the cost of transporting goods across the country, while also reducing the environmental impact of road transportation. Railways offer a more sustainable, cost-effective means of moving bulk goods, such as minerals and agricultural products, and can open up new trade routes to neighboring countries. Ports and maritime infrastructure are equally important for Ghana's economic growth. The ports of Tema and Takoradi are vital for international trade, but they require modernization to handle the increasing volume of goods moving through the country. Expanding port facilities, improving customs processes, and enhancing connectivity with land transportation networks will enable Ghana to increase its competitiveness in global trade. In addition to transport infrastructure, Ghana must invest in energy and water supply systems to meet the needs of its growing population and industrial base. Sustainable energy infrastructure, including renewable energy sources, can address energy shortages while reducing reliance on fossil fuels. Similarly, expanding access to clean water and improving sanitation will contribute to better public health and quality of life for Ghanaians. A vision for a sustainable future. Ghana's path to recovery and long-term prosperity will be determined by its ability to innovate, diversify, and build resilience across all sectors of its economy. By strengthening its institutions, fostering a more inclusive economy, and addressing critical challenges such as climate change, healthcare, and infrastructure, Ghana can position itself as a regional leader in Africa's economic transformation. The journey ahead is not without its challenges, but the country's rich natural resources, youthful population, and growing entrepreneurial spirit provide a solid foundation for future growth. Through careful planning, strategic investments, and collective action, Ghana has the potential to emerge from its current economic crisis stronger, more resilient, and better equipped to compete in the global economy. By fostering collaboration between government, the private sector, civil society, and international partners, Ghana can ensure that its recovery is sustainable and inclusive, ultimately creating a brighter future for all its citizens. As Ghana moves forward, the lessons learned during this crisis will serve as a guide, helping the nation build a more diversified, innovative, and sustainable economy that can stand the test of time. Building a knowledge economy, investing in research and innovation. To truly embrace the future, Ghana, and by extension, other African nations, must invest in building a knowledge-based economy that fosters creativity, innovation, and technological advancement. A knowledge economy is one where the production of goods and services is based primarily on knowledge-intensive activities that contribute to the innovation process. For Ghana, this can be achieved through a concerted effort to enhance its education system, increase research and development, R&D, and promote innovation in key sectors such as agriculture, technology, and energy. One critical area is the promotion of innovation hubs and tech incubators that support startups and foster a culture of entrepreneurship. The government, alongside private sector partners, should invest in innovative ecosystems that encourage the development of homegrown solutions to local challenges. By funding and supporting the most promising startups, particularly those in the fields of fintech, agritech, and renewable energy, Ghana can become a regional leader in innovation. Additionally, universities and research institutions must play a pivotal role in advancing the country's research agenda. Research institutions can collaborate with industry leaders to address real-world problems, fostering knowledge transfer and enhancing the country's global competitiveness. Ghana should focus on aligning its research agenda with its national development priorities, particularly in sectors such as agriculture, climate change, public health, and sustainable energy. Promoting a culture of innovation and establishing a comprehensive national strategy for R&D would enable Ghana to leapfrog traditional development models and become a leader in creating cutting-edge technologies that can serve both the domestic market and the global community. Improving governance and strengthening democracy. A critical component of Ghana's future success is the strengthening of its democratic institutions and governance systems. While Ghana has made notable strides in promoting democratic values, there is always room for improvement. Transparency, accountability, and the rule of law are essential for building a prosperous and resilient society. To ensure that the benefits of economic growth reach all citizens, the government must remain committed to eradicating corruption and promoting good governance. This means continuing to fight for the integrity of public institutions, ensuring that public funds are used efficiently and that decisions are made transparently. Anti-corruption measures, such as independent auditing, public access to information, and stringent legal enforcement, will contribute to a stronger and more accountable government. Moreover, it is essential to strengthen political and electoral systems to guarantee that democratic processes are respected and that citizens' rights are upheld. The development of inclusive and fair political processes allows the population to have faith in their leaders and institutions, which in turn drives national cohesion and social stability. Political leaders must also prioritize social justice, ensuring that the benefits of economic development are equitably distributed, particularly in marginalized communities. A call for regional cooperation and African unity. As Ghana navigates its economic recovery, it is essential for African leaders to recognize the power of regional cooperation and the need for unity on the continent. Africa faces many common challenges, from climate change and health crises to political instability and economic fragility. By working together, African countries can achieve much more than they could individually. Leaders must prioritize regional integration through organizations like the African Union, AU, and the African Continental Free Trade Area, AFCFTA. The AFCFTA offers a unique opportunity for African nations to create a single market for goods, services, and labor. By reducing trade barriers and improving cross-border infrastructure, African countries can harness the power of intra-Africa trade to boost economic growth and create jobs for their growing populations. Beyond trade, African leaders must collaborate on addressing common challenges such as conflict resolution, security, and health crises. By pooling resources and expertise, African countries can strengthen their collective security, promote peace, and tackle shared health challenges, such as infectious diseases and access to healthcare. African countries should also invest in regional infrastructure projects that enhance connectivity, such as roads, railways, and energy grids. These projects not only facilitate trade, but also help to alleviate poverty by improving access to essential services and economic opportunities. In addition, greater collaboration on technology, education, and innovation can accelerate Africa's progress towards becoming a global leader in the knowledge economy. Advice to African leaders. To African leaders, the time for decisive action is now. The challenges we face as a continent are significant, but they are not insurmountable. The key to success lies in embracing unity, innovation, and sustainability as the foundation for future development. African nations must break free from the constraints of dependency, corruption, and inequality. Rather, they should aim to build resilient, diversified economies that leverage their human and natural resources for the greater good. Leaders must be bold in reforming their economies, addressing systemic challenges, and creating an environment conducive to entrepreneurship, innovation, and investment. Good governance, transparent institutions, and an unwavering commitment to social justice are necessary to create inclusive growth that benefits all citizens. Equally important is the need for African nations to collaborate regionally and globally. Regional integration is critical to Africa's economic future, and through organizations such as the African Union and AFCFTA, we can create a strong, united Africa that can compete on the global stage. Finally, African leaders must empower their youth, who make up most of the population, to drive innovation and change. With the right policies in place, the youth of Africa can be the greatest asset in transforming the continent's future. Summary of key messages. 1. Economic diversification. Ghana and other African nations must diversify their economies to reduce dependence on commodities and develop resilient knowledge-based industries. 2. Financial inclusion. Expanding financial services to underserved populations, especially in rural areas, is essential for empowering businesses and individuals to contribute to the economy. 3. Climate change. Adaptation. Climate resilience is crucial for Ghana's long-term stability. Investing in sustainable agriculture, renewable energy, and climate-smart infrastructure will safeguard future growth. 4. Innovation and R&D. Investing in research, development, and technology is key to creating new industries and opportunities for economic growth. 5. Good governance and transparency. Strengthening democratic institutions and ensuring that government actions are transparent will foster trust in the system and attract investment. 6. Regional cooperation. African countries must work together to tackle shared challenges, strengthen trade ties, and build infrastructure for economic integration. 7. Empowering women and youth. Empowering women and ensuring that young people are prepared for the future workforce is essential for inclusive development. 8. Sustainability. Economic growth must be achieved in an environmentally sustainable manner to ensure long-term prosperity for future generations. The journey towards economic transformation in Ghana and across Africa requires vision, commitment, and collaboration. By investing in key sectors such as education, technology, and sustainable infrastructure, and by fostering good governance and regional cooperation, Africa has the potential to overcome its challenges and build a prosperous, self-sufficient future. African leaders must take the necessary steps today to ensure that the continent's growth benefits all of its people, from the rural farmer to the urban entrepreneur, and that it paves the way for future generations to thrive. Thank you for watching this deep dive into Ghana's financial situation. If you enjoyed this analysis, don't forget to like, comment, and share your thoughts on the topic. Subscribe to the Bold African Voice, BAV, for more insightful content on Africa's most pressing issues. Stay informed, stay bold, and we'll see you in the next video.